Hey guys, welcome to another video. In today's episode, I'm going to explain how to take advantage of the liquidity that is created around support and resistance levels, including 3 different scenarios that you can use to find trading opportunities. This is the first out of 4 episodes that I'm going to do. My goal with this mini-series is to cover the most important aspects of price action, to help you understand how the market moves, including a few ideas on how to take advantage of those movements. After that, it's up to you to find the best setups that fit your personality and your risk tolerance in order to create your own trading plan. So in this first video, I'm going to share my thought process when I look for setups in the market. Basically, I'm trying to find out where the liquidity is in the market. And a great place to look for it is around support and resistance levels, and where the decision point to break those levels is. You don't really need to have a deep understanding of how the market moves in order to apply the content of this video. That will be the focus of the second video, which complements the first one. In this case, I will explain how to connect the dots between a simple setup and a more complete approach of the market, by understanding what is going on in the bigger picture. For that, I will cover the process I follow anytime I do my analysis, which includes answering the following 3 questions. Where is price coming from? Where does price want to go? And where is price at the moment? The main advantage of understanding the bigger picture is to help us to manage the expectations we have for each setup. Is this a good level to look for a trade? If yes, what target should I expect from it? Just a parenthesis, if you haven't watched it yet, I made a video talking about the benefits of doing higher time frame analysis. If you are constantly opening trades in the wrong zone, I would recommend you to watch the video. You can find the link of the video in the description below. So the answer of those questions about entries and targets will be covered in the third video, where I'm going to focus on predicting what I expect to happen next in the market, the different scenarios on where to look for entries, including the price section that I would like to see as confirmation to execute the trade, and which pace does price want to fill. In this case, what are the possible targets? In the last video, I'm going to apply all of it to a real chart, which can be selected by you. Just comment below which pair you would like me to analyze. Let me know which pair before the release of the third video of this series. And of course, if this is a topic that you will be interested, don't forget to like and subscribe to the channel, so you don't miss the next episodes. Even if you look at the market in a different way than I do, I believe you will be able to get some practical value from this series and apply it to your own trading. It can either be a better way to choose your entries, define your final target, or be more patient while waiting for the best setups. So, I would like to start by sharing with you my 3 principles about the market, so you can have a better idea on why I look at the market the way I do it. My first principle is that the market is not random. For instance, when price respects or breaks a level of structure, even for a couple of pips, for me there's a reason for that, which sends a signal on what to expect next from price. Or, when price leaves a fresh decision point behind, there's also a reason for that. I'm not talking about knowing exactly what price will do in every single moment, instead, I'm talking about how price behaves in certain levels. Secondly, I don't look at the market as bullish or bearish. I see it as space that needs to be filled. Depending on the price action that you have, it's possible to know what space is available in a certain moment. And this is where scales come into play. What many can see as bullish or bearish trend, in reality it can be just price filling a space in a weekly or monthly chart. For sure, that move will look like a strong trend in a lower time frame or even on a daily chart. Let me just show you an example of what I mean. So let's take a look at this daily chart on Eurodollar. The reasons I don't like to use the expressions that the market is bullish or bearish, those are the terms that the guys use in the media, is because I see the market as moving from one level of structure to another level of structure. And if that structure is in a bigger time frame, of course that will look like that price has been in a strong bullish trend or in a strong bearish trend. For example, in this scenario, we all can agree that price since 2017, right? Since this low, the end of 2016, beginning of 2017, price has been moving to the upside. If you want, you can consider this as a bullish trend. But in reality, if we zoom out, we can see that price has been reacting from this level of structure. Basically, we had all these lows, and the decision point to break them was somewhere in here. As you can see, from here price made all this movement to the downside. breaking out these walls here on the left side. So it was expected that price eventually, when it retraced to the upside, it would react from there. So from these lows, end of 2016, beginning of 2017, prices move all the way to the next level of structure. And after that, price reacted from there, and it made all this move to the downside, which is during basically from the second quarter of 2018 until basically the beginning of 2020, when COVID started. And where did it react to? There you go. Price just reacted again to these lows. So it's basically moving from structure to structure. And then around March 2020, when the lockdown started to happen all around Europe, in the UK, and then eventually in the US, price made all this movement to the upside until the end of the year. And then beginning of 2021, price reversed from here. Again, till where? Another level of structure. So basically price has been moving from one level of structure to another level of structure, from highs to lows, lows to highs. Now you can consider that as a bullish or bearish trend. You can say that in 2017 price was bullish, 2018 until 20 it was bearish, now in 2020 it was bullish. The way I see it is that just price is filling space in a higher time frame. For example, all this compression that price created during 2018 and 2019, it was quite expected that after price broke into this level of compression, when this movement happened, that price wanted to go at least until the other edge of the compression. Maybe somewhere here where the compression started. And there's no surprise as well that price makes that movement in such a strong move like it happened here. Because all these orders have been picked up on the way down, so then price is filled to go just to the upside. After that, during this year, price has been moving to the downside. And recently, price just broke these lows. So what's next for Euro? We'll see. By the way, if you haven't watched it yet, I made a video explaining how I predicted the reverse on Euro-Dollar at around this high, and the possibility of price going all the way to the downside after the fake out of this high. You can find the link of this video in the description below. So as long as we have historical data on the left side of the chart, our goal should be to try to determine which space price wants to fill. Of course, if you are looking for lower time frame trades, a monthly or weekly scale will not have that much impact on your day-to-day trades. And my last but not the least principle is that for me, all of this is a liquidity game. Price in the end is just moving to collect orders from specific levels that are determined by the institutional traders, the so-called smart money. And that's why manipulation is created around those important levels that the retailers like to trade from, in order for the ITs to collect the retailer's stop loss to fill their orders. Having this in mind, that's how I start my analysis. When I look at an empty chart and start looking for setups, my first thought is asking myself, where can I see liquidity in the charts? Why did price behave in that way around that level? Let's imagine that I was in the institutional trader's shoes. What kind of price movement would I need to create in order to accumulate as much liquidity as possible in the levels that I wanted to trade from? After that, I start looking for those zones in the market. And I try to keep it as simple as possible. The first thing I do is to look for important levels of structure, such as support and resistance, and inside that zone I try to identify where the decision point to break the structure is. This is a zone that price wants to visit in the future. After the level of structure is broken, a new zone is created, and you need to see where the extreme of that new zone is. What I mean is, until where price retraced after the break. In that moment, the market is also making a decision. Those two levels, the decision point and the extreme of the retrace, are important. And depending on what happens between those two levels, there will be different types of opportunities to look for trades. And explaining those scenarios is the main topic of this video. So let's take a look at the different scenarios that can happen. So in here, we have this level of support that has held price 2 times, in here and in here. And eventually, price decides to break it. One of the points that I mentioned before is the decision point to break the level, which was around here. We can either draw out the zone, or we can be more specific and just draw this smaller zone in here. So this decision point is like a supply zone for those that trade supply and demand. And this is the zone that price needs to come back in order to collect the orders that were left behind. Now, the other level that price likes to react from is the decision point aligned exactly with this level of support and resistance level that was just broken. What we can see sometimes is price creating a smaller decision point in there, aligned with this level, and then price carry on to the downside. In this case, this level sometimes is not visible on the same scale that you are looking at, but most likely is going to be just visible in the lower time frame. Imagine that this is a 1 hour time frame chart. This will be visible maybe on the 5 minutes or even 1 minute time frame. So in theory, we have these two levels that price likes to react from. We have the decision point in the scale that you are looking at that decided to break support level. And then we may have this decision point in a lower scale that usually it's also important. And after that, the other zone that I mentioned is the one created after the break of the structure. So at the moment we have this big drop to the downside, and now price has to retrace. And it is in this moment that we can have different scenarios. And the extreme of that retrace, in this case it could be this high, is another zone where price makes a decision. It is in the moment of the retrace that we can have different scenarios. And each scenario has a different meaning. So the first scenario that can happen is the most basic one, which would be price would retrace up until the decision point, in this case this supply zone, and react from there and then carry on to the downside. This is a simple supply setup, where price collects the remaining orders that were left behind after price created this imbalance. In this case, this is what I consider a normal move from price. There is this imbalance that is created around this decision point, price goes down, price retraces, collects the orders and continues to the downside. And if price carry on doing this kind of movement, then it will retrace, respect a new zone, create a new lower low, comes back, respects the high again, and this is how compression is created in the market, which is price is collecting all the orders on the way down. So this is the first scenario, and this is one of the most common setups that people tried, supply or demand zones. However, if price would behave always like this, it will be too simple. So what the institutional traders do is to create some kind of manipulation around these levels in order to create enough liquidity to fill their orders. The way they do it is to create some kind of fake structure to make the retailers sell in the wrong zone and place their stop losses where the institutionals want to fill their orders. And this brings us to the second scenario, where price retraces but never gets to the decision point, like in the previous example. But instead it stops in the middle and then it continues in the same direction. And in this case we have space between this high and the decision point, which is exactly what I'm always looking for in the market. I'm always trying to find out where I can see space in the market. Now if you take a look at where this high reacted from on the left side, most likely you'll see that price also reacted from some kind of decision point that was created on the way down. However, this decision point is only visible in a lower time frame. For example, if we consider that this is in a 4-hour time frame chart, most likely the decision point where this high reacted from, it would be just visible on the 15 or 5 minutes or even 1 minute time frame. And there's no problem with that. These decision points that are only visible in the lower scales, they are also a great place to look for possible trades. But the main point of this example that I'm explaining is to focus on the price section that is visible in the scale that you are looking at. In this case, the 4-hour time frame. And what we can see in here is that this 4-hour time frame decision point is still fresh because this high never retraced all the way back to the decision point to collect these orders. So we have now this place in here. So something that you should remember is that the bigger scale is always more important than the lower scale. That doesn't mean that we should ignore what's going on the lower time frame. Quite the opposite. Because these decision points that are only visible on the lower time frame, they are actually an amazing place to look for trading opportunities. And those lower time frame levels, they can actually manage to hold price several times. And if we actually have valid price action around this high, we can actually look for sales inside here. Now, the way I drew this example, it looks like this high is reacting from the decision point aligned with the support and resistance level. And that could be the case. However, that doesn't need to happen like that. This high can be created way below the support and resistance. It doesn't need to be aligned with it. As I mentioned before, the main point is to focus on the price action that you have in the same scale that you are looking at. In this case, the 4-hour time frame. Now, when should you expect for price to go and collect these orders? For sure, there are different ways that price can move in order to go and collect those orders. But now I will focus in two moments. The first one is when price goes and fakes out this high almost immediately after this high has been created. Price can even create a new lower low after this high is created, because after we have a new lower low, for sure there will be a lot of people interested in selling when price retraces to this high. One way that price can create this movement is price retraces after creating this lower low. Now price goes up, creates some kind of structure in here, and now it's going to look like this high is being respected. To attract even more sellers inside there, price can even engulf this low, giving indication that price wants to go down in the future. But before that, price will go up again, and now in a strong move, it's going to collect all the stop losses from these sellers that we have in here, and entering short where they wanted to do it in the first place. And now price is free to continue the move to the downside. So in this first scenario, the fake out of this high into the fresh decision point happens before price actually makes the big move to the downside, which is the opposite of the second scenario. So let me just delete some of this. So in the second scenario, the fake out is not going to happen immediately, because in this case, this high is going to manage to hold price down in a moment. What I mean is that this high is going to be the new extreme of the new zone. And now in the future, when price is retracing back to the zone, most likely after price had respected or engulfed an important level of structure in the same scale that you are looking at, in this case it could be the 4-hour time frame, that I will be expecting price to fake out this highs, or this resistance level, into the fresh decision point that was left behind. And when you have this kind of space that is left behind for the future, it's actually one of the best zones to look for trades, especially if these highs are visible in a higher time frame. It can be on the daily or weekly chart, because it will attract a lot of sellers when price retraces there in the future. Because, as I mentioned before, one of the most common setups that the retailers look for is to trade support and resistance levels, and the rules they use for their stop loss is to place their orders above the highs. And now it will be the best moment to fake out these highs and collect all their stop losses into the fresh decision point that was left behind. And after that, price can retrace. Now let me show you an example by taking a look at the higher high of the year on Aussie dollar and Euro yen. Let's start with Aussie dollar. Before I zoom into this level to take a look at what happened in there, let me show you a prediction I did back in February, before this move actually happened. As you can see, we had this high here that managed to hold price down. In this moment, it was the extreme of the zone, and from there, price created this compression on the way down. We also had this high and then this high. And from there, price created out this move to the downside, reacting from these lows, and then reversing in here around February or March 2020. I think it was when the lockdown started. And now price was approaching this zone again. When I made this prediction, price was around here. It was at the beginning of February 2021. And what we have now is that price had already broken inside this compression, which means that price wanted now to fill at least to the other extreme. But besides that, what I also noticed is that this decision point was still fresh, because this high never made the move to go and collect those orders. And that's why I made this prediction on the number 2. I was expecting price to go, fake out this high, and eventually move to the downside. And as I mentioned before, when these highs are visible on the higher time frame, in this case this is a daily chart, and if you go to the weekly, you can also see this high in the weekly chart. This gives even more strength to a possibility of a big reversal. This number 5, it will be the last zone to look for sales inside this origin, and we will see what is going to happen when price gets there in the future. If you take a look at my predictions for targets, this will be an option because we had this low and this was still a fresh decision point, and it was also aligned with this support and resistance level. And the other possibility that I didn't mark here, but you can see I had this compression mark, it will be somewhere underneath this compression. And that's exactly where price reacted from at the moment. However, regarding the topic of targets, that will be covered in more detail in the third episode of this mini-series. So if you don't want to miss it, don't forget to subscribe to the channel. And now back to the chart. As you can see, this is where AUDUSD has reacted from at the moment. And the other target that I mentioned, it was around here, around this decision point. I think it was inside there. And as you can see, price actually bounced from there. But however, it only moved until the next level of structure and then it continues to the downside. Because there was no price action that price wants to go higher from here. And now if you take a look at where this high reacted from, this level inside here, I will show you what I mean. So we had this low. It was the last low that created the last higher high. And after the break of the low, we have this decision point inside here. And this level is still fresh, because this high never took the orders from there. And this is an example of the space that I try to look for in the market. Now let's take a look at Euro-Yen. This is the high that I wanted to talk about. And inside here is where I was looking for price to react from. Actually, in this scale, in the daily chart, it looks like it has been touched already. But if you take a look at the weekly chart, you can see that at this scale, price actually left this space behind. It has this compression inside here, similar to what we had on Aussie dollar. After that, it created all this move to the downside. And now when price was approaching this zone again, that's when I tried to find a possible fresh level somewhere inside here in order to fake out this high. Now I will show you a short clip of me analyzing Euro-Yen. This was recorded around the end of May, before this high was created. This is just to show you an example of how I do it. On Euro-Yen, to have this compression, and then you have this one, that is the SR movement of this one. There's orders in there. Price never did this. Yeah, this I never did it. So actually, there we go. Actually, we have this spike here. See, this spike may have taken out the orders. This one. Again, all this looks compressed. Actually, may have a good zone in there. From here, basically the last fresh zone inside here, after that's going to be compressed. So I wouldn't be surprised if price actually just breaks the compression for a little bit and then goes down to collect some more orders, and then in the end it's going to finish the move, because once you break into the compression, price wants to go to the other extreme, or even break it, but at least to the other extreme, which maybe is not here, maybe it's there because of this spike. So yeah, then price wants to fill it. I wouldn't be surprised if price then just over there on the right side, but if price just breaks it, go down, collect some orders, and then fill the zone. And this is me trying to predict how price would move towards the zone in order to fake out that high, collect stop losses, and react from that origin inside the spike that we saw in the lower time frame that was still fresh. So price, after reacting from there, it could break the low, engulf to the downside, and then still retrace, collect the orders from that left shoulder, and then it's free to go down. And as you can see, this is what happened on Euro-Yen. So price created this move that I predicted. It eventually went up, it fake out, reacted from there. We had this break of this low as I predicted. And now price retracing around the same level of this left shoulder. And after that, price was free to go to the downside. Because after breaking this low, we basically have the confirmation that price wants to go down, and we have all this space to fill. Okay guys, let's see if you have been paying attention to the video. Just by looking at this picture, let me know where would you be looking for targets inside here. Let me know in the comments below if you got it right. Another example that you can check is the video that I did on Eurodollar and how I predicted the reversal in this level. As you can see, price is just picking out an important high on the left side, and besides that, price is also reacting from an important level on the left side of the chart. In this video, I explain in more detail the price action that usually happens around reversal setups. As I mentioned before, you can find the link of the video in the description below. Finally, we have the third scenario. In this case, price retraces and eventually breaks out these decision points. Most likely when this happens, price has reached an important level of structure on the left side, in the same scale that you are looking at. Or it even broke the level. And now price is ready to go up and collect sell orders above this level. This is going to be a topic that I will cover in more detail in a second video of this series. The importance of understanding where price is coming from and how does that affect where price wants to go next. Now that price broke this decision point, we have two types of setups that you can look for. You can either have just a fake out of the decision point and then price retraces to the downside, or you can have a kind of breakout strategy and price retesting this high and after that carry on the move to the upside. Let's start with the fake out setup. So what you can see is price retracing towards the decision point, and when it gets there, price usually has some kind of reaction, but it's not that strong. And eventually price continues to the upside, and in here we have the decision point to break the high. And if price wants just to fake out this high instead of carry on to the upside, eventually price will start breaking the previous lows. For example, price already broke the first one. It still goes down. We have now a double top in here. Breaks the second one. And then it goes. So basically what we have in here is price creates a fake out, it creates the first engulf down of this demand, and then we have the second engulf in here. Meanwhile, price created this initial structure that can be used to be faked out. So you have this double top and you have a new lower low. This was another zone, important decision point, and this was the other one. And we have this origin that is in here, which is also aligned with this left shoulder. And in this case, I would consider this as space between the origin and these highs. After this, price is free to go to the downside. One thing to remember is that even though we can see this high as a fake out at the moment, this in reality is an engulf for the future, because we just broke this important level of structure, so price wants to go higher in the future. From that point, price can actually do three things. Again, it's a topic that I will cover more in the second video, because I need to have a bigger understanding of what's going on in the market. But in this case, price can have just a small retrace and now carry on to the upside. You can actually have a deeper retrace until the origin and then carry on to the upside. Or you can even go and fake out this low and now carry on to the upside. These are basically the three scenarios that you can have after price creates this engulf to the upside. Let me just delete this. Now the second setup is a type of breakout strategy. You can just trade the normal setup that everyone knows. After the break of this high, price retraces to the previous structure and now carry on to the upside. And this is the simple way to trade breakout strategies. Another option, it would be to wait for space to be created and then to look for a setup. Just like this. So price is approaching this decision point. Initially it gets respected, but the reaction from the decision point is not strong enough to move price down, and eventually price breaks to the upside and then retraces. Price may retest this previous support and resistance level. It's not necessary to do it. It can actually happen above that. And after that, price goes up, creates a new higher high, and now price retraces again. And usually what you see is price respecting this low that was just created, creating kind of a double bottom setup. And eventually we have this fake out into this first decision point that was still fresh. And now it's free to go to the upside. So what we have here is the decision point that was still fresh. We have this double low that I just mentioned, which was in order to attract as much buyers as possible in there. This was the last decision point to break this double low. And now after the break of this, price wants to go higher. And we have this space that it was created on purpose in order to accumulate as much liquidity as possible from the stop losses from these buyers that created this double low. And this kind of space is what I look for when I'm looking for the breakout strategy setup. And after that, we had this engulf up. And we have a new higher high, which gives strength that price wants to go higher. And then after this small engulf up, we could look for the retest of price and then try to join the move to the upside. Now, how this move looks like that it's reacting to this high here on the left, but let's ignore it. Let's pretend that this high is the only high that we can actually see in here. Let's take a look at a few examples of this setup in the market, where we can see this kind of space in a breakout strategy. On the 13th of September, I tweeted something similar that included this scenario that I just described. This is the tweet I posted. And as you can see, it included two options. We had this option A and this option B. And this option B is the same scenario that I just explained, where you have this space between the decision point and this level of structure after we have this breakout. And after the 13th of September, we can see an example on Bitcoin and Euro-Dollar with price behaving almost exactly like this. So this is Bitcoin, and you can see that we have this decision point, and you can see that we have all this resistance in here with all these highs, and in here you can see price finally breaking all this structure and going to the upside. After that, price retraces, and the maximum it goes is until here, and we start having all this compression on the way up until we break this level where price gives indication that it wants to go higher in the future. But after that, price drops and starts to respect all this level, which is going to accumulate more and more buyers around here. We even have price breaking these highs to the upside, and after that we have price faking out all these lows into the first decision point that was left behind. So in yellow, as you can see, this is the space that was created between these two levels. And after that, price was free to go to the upside, and at the moment Bitcoin has already broken this higher high that was created back in April. So this is the Bitcoin example, and now let's take a look at Euro-Dollar. Similar scenario, we have all this resistance level composed by these highs. We have this level that was decision point to break out this structure on the left, and we can see that price never retested. It leaves this space and it starts creating all this new structure around here. Again, we have another engulf to the upside, showing indication that it wants to go higher. After that, when price retraces to the downside, it respects all this level. You can see how strong this level was, because it managed to hold price up quite a few times. You can see in here, all these lows in here, until eventually we have the move to the downside, collect all the stop losses that were created with all these buyers, and then we have now the move to the upside. As you can see, it's basically the same setup, and it's interesting that you can see happening in the Forex market and even in the crypto market. Another two examples that you can see is in the S&P 500. In this case, it was after the break of historical high, all-time high. So price finally broke it. You can see the space that was created in here. You can see this level of structure that it held price a few times, and then a strong move to the downside. You collect the orders from this decision point. In this case, it was actually aligned with the historical high, and then price went up and moved to the upside. And this is the price action that you can see in here. And the last example that I'm going to show you, it's basically the same as this one, which was on Ethereum. This line, if you check on the left side, is exactly the all-time high that was created back in May. Price respected initially, and now it broke it. And we can see we have this strong decision point, and we have this new structure. There is space in here, because this low never collected the orders from here. After that, price respected it, and this was the prediction that I did even before it happened. And in the end, this is what happened. We had all these highs. There was the higher high there on the left. We have the first decision point that I had marked in here, and we had the space between these levels that will be used to attract liquidity. And once again, we have this structure. Price initially respects it, just to attract even more buyers to buy inside there. And besides that, we have this high and the new higher high. And this is what happened afterwards. And if you want to see similar content about trading, don't forget to follow me on Twitter. That's where I share tips and analysis about the market on a daily basis. And you can always text me in there. To conclude, in this first episode of the mini-series, I decided to start by explaining the zones that I usually look for setups. I focus on important structures, such as support and resistance, or highs and lows in the higher time frame, and then I try to look for the space between the decision point and the fake structure that was created around those levels. I know that those decision points were left behind for a reason, and after that, it's only a matter of being patient and wait until price goes back to those levels. Besides that, I also demonstrated a few scenarios of what price usually does around those levels. You need to practice and get used to see how the market moves, the levels that price is always visiting, and eventually you start being able to identify those zones. Then it's a matter of being able to understand which of the scenarios is more likely to occur in that moment. Do you expect the decision point to hold price, or to be faked out, or to be ignored and to look for a breakout kind of strategy? The answer of these questions will be the focus of the second video, where I will explain how looking at the bigger picture can help us to find some clues on what to expect from those levels. The main goal is to stop guessing and instead start adjusting to what price is doing and finding the right moment to execute the trade based on the price action that you can see. Now let me review what I covered in this episode. So how to trade support and resistance levels with liquidity. First, define your core beliefs about the market. Until you define what those principles are to you, you will be always jumping from one method to the other. And you will not be able to go all in and learn everything you can about the system that you are trying to implement in your own trading. Never trust 100% what someone else says. Do your own research, collect your own data, spend those hundreds of hours in front of the charts, analyzing it, observing how it moves. Only then you'll be able to define those principles to yourself. And once you do that, you'll find a peace of mind because you'll stop chasing after what everyone else is doing. You can still study their charts and see what they are doing, but by observing it with your own lenses. The next one, Forex market is a liquidity game. Everything I do when I'm looking for a setup is to try to answer the following question. Where is liquidity being created? Why in that zone? And what does that mean? And the last one is what kind of movement should I expect in order for price to collect those orders? Being able to reverse engineer what you expect to happen is a great skill. More on that in the next videos. First, we need to identify the 3 important levels that were created during the break of the support and resistance zone, where the decision point to break the level is, the possible decision point aligned with the support and resistance line, and the extreme anti-where price to trace to. And secondly, the 3 possible movements that price usually does after the break of the support resistance zone. This price retraces to the decision point collecting the orders and then continues to move. That's the beginning of a compression move. If price retraces but leaves the decision point behind with fresh orders, in this case we have space between the fake structure that was created and the initial decision point. So eventually this fake structure is going to be faked out. And the third scenario is when price breaks the decision point, most likely because it reacted from an important level on the left side. And after that, 2 things can happen. Price can just fake out the structure and reverse, or we have the breakout strategy where price will continue in the same direction of the move. And the last point I would like to mention is that just because a fresh decision point was broken or ignored, doesn't mean that the zone was not good. The reason for a level to be respected or not has more to do with what happened before price got to that level than the level itself, a topic that I will cover in more detail in the second video. And that's it, guys. I'll leave you with a few recommendations for today's episode. First, practice to identify the decision point that breaks the level, or if there is any decision point aligned with the support and resistance level. Keep an eye on those zones and study how price reacts there in the future, especially when those zones are left behind and there are space between those levels. Additional to that, try to find a few examples in the charts of the different scenarios that I talked about in this video. If you want, you can share the examples with me on Twitter and I will give you my feedback, or comment below and you'll find a way to connect. And in preparation for the second episode of this series, I challenge you to take a moment and do your own analysis in this chart. What price action can you see in here? This will be the chart that I will use in the second video, where I'm going to explain in detail how I do my analysis in a naked chart. And don't forget to let me know in the comments below which pair you would like me to analyze in the last video. If you got any value from this episode, don't forget to like and subscribe to the channel. It really makes a big difference. And if you know anyone that would benefit from watching this episode, please share with them. Thank you for watching, guys. See you next time. Obrigado.